All right, everybody, welcome back to the HPT live webinar. And today in this webinar, we are going to be breaking down the week ending over here at 6/27/2025. And in this webinar, I want to break down a lot of good stuff because there's been obviously we trade our three-step approach each and every single day, right? Open print, moving average cross, red bar ignored, green bar ignored, entry, right? Very simple, strategic, but highly effective way for you to get in and out of the market, right? But what happens if your strategy doesn't present itself, right? What are some other tools that we can use to identify opportunity? And that's exactly what I want to talk about. And obviously our strategy performed exceptionally well this week, putting us right at that 75% win ratio for the whole month. Yet again, doing exactly what we can expect it to do, right? We're on our 10th month over here at HPT, trading this very specific approach, right? And I tell you what, so many traders have taken advantage of it, and it's doing exactly what it's supposed to do. It's supposed to keep you grounded. It's supposed to keep you patient. It's supposed to keep you in the live moment so that you can focus on the information that actually matters. So today in this webinar, we're going to be breaking down a couple new topics, right? We're going to be breaking down the ORB, right? The open range breakout. Okay, this is definitely a very effective tool. You can see right here, and it's really simple. For anybody that's not aware of what it is literally the first 15 minutes of the day, you draw a box around it, right? And what this does is kind of helps you stay away from choppy price action, okay? Because once you draw a box around this first 15 minutes, this becomes your area of, indecision, right? The market really hasn't taken any pathway yet, right? The first 15 minutes, market goes down, goes up, it consolidates. And then you'll see here, right? Once we closed outside the first 15 minutes, we got a lot of buying pressure to the upside, right? So this is something I definitely want to talk about. I haven't collected 10 months of data on it, so I can't sit here confidently and tell you, hey, once you close outside the orb, enter, okay? But I have done a lot of study on it, and it is definitely a good tool to help you better understand the market conditions. And at the end of the day, that's what it's all about, right? Really understanding who has control over the price action, which way it's headed, so that you can get in the market and make money, okay? This is our goal each and every single day, okay? Understand, we call it identify and adapt, right? Identify the market conditions and adapt to them. And it's been a phenomenal week. This has actually been a really good month. On Monday morning, right, we got a lot of buying pressure here. You'll see beautiful bull 180, right? That very large green bar right there, wiping out the red one in front of it. I did not capitalize on any price action to the upside. That doesn't mean that there weren't any good moves. There was definitely a lot of good opportunity right here, right? But I didn't capitalize on any of it, right? It's literally, it was kind of moving. Well, I'll tell you what, it didn't give me a moving average cross, okay? But what I do like about this is look here how price comes right into end of day in previous day low and then just takes right off. Hold up, give me a second here. And guys, make sure you hit your mute here. That way, where there's no noises in the background, anything like that. Obviously, if you guys want to say something, go right ahead. Feel free. This is an open mic. If you guys have any questions, anything like that, right? All you got to do is unhit your mute button and then dive right in. All right, so let's see here. I want to show you guys because the 1 hour time frame is very important to me. Okay, so the day we're talking about is right here, right? And just so everybody knows, I have some lines on my chart. Let me explain them so you guys know what it is I'm looking at. So these lines right here, we got a blue line, gray line, purple line. That's previous day high, that's end of day, and that's previous day low. Okay, so these are our pit numbers, right? These are the levels we watch every single day. These are our targets. These are our areas that we enter in at, right? These are the levels that are what I like to call the book, right? The market paints a picture every single day. Our job is to figure out which picture the market's painting. We do this by watching the price action at the pit numbers, okay? So over here, you'll see pre-market plan was very simple. We had end of day and previous day low. I'm going to draw a little box around it. So now as the market opens, I'm looking at this in a bullish and bearish scenario, okay? We're below the 50 on the 1 hour. We're selling off and we're coming into EOD in previous day low. This becomes our sweet spot, right? I call it a sweet spot because once again, what happens here is going to give us a better understanding. If sellers push below EOD and we get our criteria, we're looking for shorts targeting previous day low, 591, 591, 590, etc., etc. Okay? But if buyers show strength, we're then going to look for longs, and my first upside target would probably be 596, 57. Then I would grab end of day from this day right here. So then it would be 59732. Let's just put a little line right there. And then obviously I'm going to target previous day high as well. So that's how I approach the market each and every single day. Okay. It's either going up or it's either going down. We have to figure out which way it's going to go. We do this by using our simple approach, right? So market opens up. Where are we at? Right here. Just watch how price comes into the sweet spot, right? So initially we get a bunch of selling on this first 5-minute candle. And this is where the orb gets very effective. Okay, bunch of selling off open print into end of day. Now, initially I'm looking for a short play if we can get the moving average cross and if we can get the green bar ignored. If that strategy shows up, I know, hey, based off the data, based off the last 200 trades, 80% of them are going to have a continuation. Okay, so I just wait for the market to tell me, right? What happens on the next candle? Boom. Super large buying, right? Very strong green candle wiping out the previous candle. Now, we're pretty educated on the RBI, GBI process. What does this mean? Does this mean sellers are strong? No. This right here is literally telling us, hey, listen, sellers tried, but buyers completely disrespected them. Does this mean go long? Maybe. I'm not going to take it long, only because my stop would have to go below the previous candle. That doesn't mean there's not opportunity there. It's just not the repeatable approach that I would like to take. So price rallies above the open, but this is still telling us, hey, this is still valid information. This is literally telling us sellers tried, buyers won. Okay, let's see what happens. Okay, then we rally up. What are some things I can watch here to understand the trend is healthy? Okay, look at the moving averages, right? Oh, hold on. Let me throw up the 1 hour. The 1 hour 9, guys. You guys know we're going to talk a lot about it in this webinar. Look where it's at. Okay. This horizontal blue line is the 1 hour 9 DEMA. You guys know how much I love this. This is so important. This is how we were able to capitalize on that 80% ROI move on Friday, right? This moving average on the 1 hour literally guides us so much, right? Because it literally, like, when there's a healthy trend, whether it's on a 5-minute or it's on a 1 hour, you can bet your bottom dollar that the trend has a high probability of continuing. Like, look at this 5-minute trend right here. Okay, this is very important. This is so important. Look at this trend. Okay, is this healthy? And the answer is yes. This trend is very healthy. Why is it healthy? Because there's not far extensions or gaps in between price and the moving average. This is a trend we would like to A, get into, B, hold on to your winning position, right? Like if you guys were on the session on Friday, we were able to hold that trade for over 80% ROI because of how we understand the moving averages. See, most people use moving averages so that they can be like, hey, you know, it's going up, let's go long. Yes, that's one way to use a moving average. But another way is to be able to look at the trend and go, all right, is it erratic? Is it being violent? Is it steady? Is it familiar looking? Is it healthy, right? Like this is what we want to use moving averages for, because this is what really helps change the game, okay? Anybody can go, oh yeah, buyer showed up, let's get in. But if you had a way to better understand that buyers were actually had strength here, that would have served you on a whole nother level, especially once you get the red bar to get ignored, okay? It's a beautiful trade. I didn't take it. And that's fine, right? But the principles still applied here very, very well, right? Price rallied up. And also notice the red bar that gets ignored. Where's the 1 hour 9? It's on price, okay? Just like on the 5-minute, when the price is on the moving average, you get a continuation. Same with the 1 hour. When price is on the moving average, this is very important level. Red bar gets ignored. Now you got a perfect spot to put your risk, and you get a clean continuation all the way up into your first target, okay? Like I said, I didn't get in on this trade. Price rallied up, fell down back below. Now, all right, I want to point something out here, okay? Josh, I missed the first long, but there's a red bar that gets ignored here. Should we go long? And I'm going to tell you no. Why? Look where the 1 hour 9 is, okay? Once again, guys, extensions or pockets mean pullback, okay? Right here, we are over $2 away from the 1 hour 9. This is not something we could expect to continue immediately, okay? There's a very high probability of chop or reversal when you're this far away from the 1 hour, okay? So price rallies up, comes back down. I'm still watching the market. I'm going, hey, what's happening at this line? I'm not ready for shorts here. Why? There's no moving average cross. The cloud is still green. I don't want to entertain a short play because buyers still have strength. And that's what happened. We got a very nice push up. Price comes down. Moving average cross. Green bar, right? Doesn't get ignored, but this one does. And guys, where's the 1 hour 9? It's on price, okay? Once again, very high probable area right here. Look at these two areas, okay? We got the first one right here on the moving average, the 1 hour moving average. And look at the 5-minute trend. It's healthy. It's hugging price. We're not extended. Look at right here where we get a little extension, right? Check this out. We get a little extension. Say you're in a short play right here. Josh, do I hold? Well, that's up to you. If you're trading SPX, I wouldn't, because you got to be ready for a pullback at least into the moving average, which is 61 cents away. I mean, everybody has different requirements when it comes to holding trades. It depends on what you're trading, etc., right? But what I'm getting at is the more familiar you can become with these moving average behaviors, the easier it's going to be to hold on to winning trades, okay? A lot of traders struggle with holding on to winners. And I'm not going to sit here and tell you it gets easier. It's that you get more aware to the moving average principles, then it doesn't make sense to get out of trades early, right? Because when I got in this short play right here, I hopped in this short. We got a green bar ignored. I'm in short right here. Look where my risk is at. My risk is high and tight. I'm playing off this green bar, okay? So price sells off, comes into it. We retest it. I'm able to even get in a little bit early here because I understood the moving average already happened. This green bar was pretty much ignored. We're coming into it. I get in short around 59587. My stop is above 59640, right? I think I put 59650 in the Discord just so I could give it a little room to breathe here because the EMA cloud was right there as well. So look where the 5-minute 9 is, okay? When I get in this short, I'm pretty confident that price is going to continue down to open print, then EOD, because A, this is where the liquidity is, right? This is where all the volume is. So when large money makes their move, it only makes sense for price to come down here, right? We don't get lucky and it goes back down to open print. It makes sense for price to go back to open print, okay? Because yet again, large money is just, for large money to make money, they must take everyone else's money. This is where everyone else's money is located, okay? This is where the very big moves happen. So it only makes sense that price goes down into the critical levels, into end of day. And did it go to previous? Yeah, and look, straight in the previous day. Of course it went in the previous day low, right? Because yet again, this is just how the market works. Price fell down below. Look at the moving average here. It's hugging price. There's no reason to get out here. The 1 hour 9 takes a step down a little bit, which was even more beautiful, giving you even more confirmation that sellers were here. And we captured a glorious move here down to end of day for the gap fill, right? So just beautiful play here on Monday. And the biggest thing I'd like everybody to take from this day here is that if you miss the morning move, that's fine. It doesn't mean get in right here, right? It doesn't mean force it or assume it's going to continue. It means look at the 1 hour 9. How close is it? How far away is it? Is this a healthy trend? If so, you're probably going to get a continuation. That's what happened the next day. Okay. Yet again, this is how we use that 1 hour 9 here. And Tuesday's actually a really good day here. But Monday, phenomenal day, using our tools. And, you know, it just beautiful price action here. It really was flawless. So, all right, that was Monday. Let's dive here into Tuesday. Tuesday, we're gapping up tremendously, okay? There's a very high gap up. Yet again, my pre-market plan is very simple. I go, all right, where's previous day high? Where's EOD? This becomes a sweet spot in the event sellers take control. Sellers never took control, but if sellers took control of the open, this would have been a great move to the downside. We had Powell speaking, and price opens up here, okay? So price opens up. Notice where we're at, guys. Where's the 1 hour? We're on the 1 hour 9, okay? We're on the 1 hour 9. Price rallies up. We reject down. Initially, I'm looking for longs opportunities, but we don't get the RBI, so there's no entry for me. Price falls down below. Powell's speaking at 10 o'clock, okay? And we get a green bar off open print that gets ignored, okay? So you guys know it. I have to take this short, right? This is literally my strategy to a T. Should I have not? Well, that's a good question, right? Did the trade work for me? No. But yet again, our strategy, if I see my strategy, I'm going to take it, okay? There's a couple things here that were sticking out to me. If we go back to the ORB, right, the open range breakout, the first 15 minutes, notice here, we could never close outside of the ORB, right? This is very interesting. And this is a really good tool that I think's going to help us. And I like seeing a lot of traders using this.
I just went to the website and paid.
Okay. So once this broke down below, it never closed outside of the ORB, okay? This is why, like I was just saying, the 15-minute ORB is a really good tool, right? And yet again, it doesn't necessarily mean like you have to get into a trade just because you close outside it, but it's another tool that's going to help you understand the context of the market, which is our job each and every single day, okay? So price falls down below. We get a very nice rally up. Look at this RBI off open print. I did not take this trade. I definitely should have, but I let the whole Powell speaking thing kind of, what do I want to say? Kind of make me a little bit more hesitant. But look at this beautiful red bar that was ignored off open print. And this is the beauty of our strategy, okay? When you get a green bar that gets ignored and it doesn't continue, okay, that's telling us that buyers are a little bit stronger than we thought. Therefore, once you get the strategy to the upside, which would be right here, long play, that's a phenomenal way to get into the market, right? It's that 50-50 perspective. If buyers don't have it or if sellers don't have it, do buyers have it? How do we know buyers have it? Our strategy presents itself. Also notice, I'm getting in short here. Look how far away I am from the 1 hour. I'm literally, let's see here, $1.24 away from the 1 hour trend, right? So I don't want you guys to go into this week super, worried about where the 1 hour is, but I'm just pointing out some things here that will definitely help you a little bit, right? When you're a little far away, it makes sense for price to come back up into it. And now look at the move that actually continued. The RBI that was off the 1 hour trend, okay? And then once we got back above the 1 hour 9, look at the continuation we got. we literally got a smoke show to the upside, right? So beautiful, beautiful move right there. I ended up getting in long right here. I captured a really good move up here. And yeah, and now actually let me talk about this move because this is the same exact move we took on Friday. So it went short, got stomped out, didn't go long. I was a little just Powell was kind of bothering me a little bit there. And then price got back above the 1 hour 9. So now when I'm watching price, I'm going, okay, is this 1 hour trend healthy? Let me pull it up. I want to show you guys this. Hold on. This is so key right here. All right, so this is 624. Look at price. This is the 1 hour. Okay? You guys remember that 5-minute trend I just showed you over here on Monday, right? This trend right here, chart on the left. All right, you guys see this. This right here is healthy. Healthy. Why is it healthy? Because price is hugging the moving average, okay? Look at this 1 hour trend here. Are we extended? No. Are we hugging the moving average? Yes. Okay? When I see that, I now drop to a lower time frame and I go, where can I get in this? Okay? This is healthy. We're at least going to see pre-market high, which was right here at 60674. Okay? Price looks like this. Look where that 1 hour 9 is. Price comes up, smacks off the 20, 2-minute 20, rips up, red bar, ignored, in long right here, targeting pre-market high. And now just look at these, look at price in the moving average right here. Rips up into it, rejects. On this candle, we close back above it. And then boom, we start to get that rally to the upside there where we popped. Just absolute beautiful trade. Just beautiful trade. Just yet again, using the 1 hour trend to identify healthy market conditions. And let's just do a quick recap of how the ORB would have served us. Price rallies into the ORB, rejects, can't close above it, We close above it on this candle. Okay. Close above it. And what happens? We start to move. What also happened? We got a red bar that was ignored. That would have been a great long entry. Really good long entry, especially with that RBI. Stop goes right below it. You got tight risk right here. And just look at how price smooths out once the RBI happened, right? It's beautiful, beautiful price action right there. Really good.
Yeah, Josh, what I've been noticing a lot is and what changed a lot for me when I started using open print. These open print retests, and I kind of do the same thing with the orb. I like to see a retest of the top of the orb.
Yeah.
But it's all set up off the open print retest, and I love those plays because it gives you such a small risk.
Yeah.
That's why I like to play from my risk up. So I'll enter somewhere where I can have a tight risk, and those open print retests are just give you such a good risk reward. And the same thing with the orb. That's kind of how I use it. I don't take the break out of it, but if it comes back to the top of that range and I see a RBI,
yeah,
that gives me a small risk. If it breaks out like an RBI, I take that one too. But a lot of the times, sometimes you get faked out. It's like for it to come back and retest.
Yeah.
And that's what I've been seeing a lot on the chart, and it seems to work out nice.
Absolutely. You know, and that's like we always talk about, Todd, that break and retest is such a psychological chart pattern. Because you literally, like, let's talk about what happened here Tuesday morning, right? You had a bunch of sellers that came into the market. I was one of them, right? But yet again, how does the market actually work? We have very large players. Retail traders make up less than 10, maybe 15% of the game. You got very large players. Open print has insane amounts of volume, right? Not as much as end of day, but it is pretty close to it. So it's abnormal. That tells us that these banks are making moves here. You got large institutions going short. and then price rallying up on them. So these banks, they're in heavy positions, and they're right here, they're in drawdown, right? These banks are down some money. Now, if these banks want to manipulate price, they'll get rid of all their short positions right here. There might not even be enough traders on the other end of the trade for them to do it. So they have to wait for price to come back to open print where the liquidity is. So now price comes back to open print at the exact same price they may have got in it. And how many times we all been in a losing trade and God gave us our money back. We say, thank you, God. Here you go. I'm out of this. Boom. Bygones be bygones. On to the next move, right? So it's such a psychological play that's happening off this level. And that's where that pit number theory comes from that we use over here at HPT, right? Because these levels have that volume. So if you're seeing something happen off open print and you're using your moving averages, it's going to help you get on the right side of it each and every single time. And this is why I always love it, because even when it doesn't work, right? Well, I went short right here, didn't work. Price snapped back up, and then it ended up going to the upside, right? So it's like, it's where you're trading that's important, right? It's very important. Yeah. It's them retests they're critical, very critical there. Play there. I end up taking another play there, but I wanna kind of keep going here because I really want to talk about Wednesday. Wednesday, I kind of I rushed. Was this the day I rushed to move? Hold on, Wednesday. What Thursday happened? Thursday. Okay, it wasn't. It was Wednesday. All right. So Wednesday, I want to talk about this day right here. Price opens up, okay? Price opens up, and we get some buying here in the morning, right? We're at the 1 hour 9. We don't really get an RBI, so there's no trade for me here, okay? Price sells off. We come down below the open. I see a little pocket. Pocket means pullback, right? So boom, we get the pullback. This is what we call a chop. Okay, price is going up, going back. We do not trade any of this because our strategy is a present. If our strategy is a present, the market conditions aren't fruitful. We want nothing to do with it. Okay, the goal. See, every impulsive trader out there, which I used to be, literally they're impulsive because they're unaware of what works. Okay, if you were aware of what worked, there's no way that you would, be. The goal is to get away from impulsivity and emotion and get strictly towards execution. So my edge is not here, so therefore there's no trade. Price falls down below, we come up, we come down, we get a moving average cross. So at this point, I'm willing to take a short play if I get a green bar ignored. We get a green bar ignored, I go short, boom, I get stomped out of my trade, right? Is there anything I could have done differently here? Not really. I mean, this is just a game. Some of them work, some of them don't. Look, we closed outside the orb. Right? This looked phenomenal. It was off open print. This is blueprint. This edge right here does extremely well for me. Didn't go my way. But you know what? I literally lost about 20, I think it's 23, less than 30% on this trade because we were utilizing the 1 bar approach. Okay? Price rallies up, boom, get stomped out. I'm watching this and I'm going, okay, do I just go long? Absolutely not. My strategy is not present, right? So I'm patient. Price falls back down below. In the Discord, it was funny. I was like, I don't like price action. I'm going to step away. So I step away, and I'm watching price on my phone. Price comes up to open print, and I see this. And I'm like, oh, yeah, she's going to, yep. I was like, I've seen this before, right? Look at that. Fall right down below open print. Retest open print. The same exact thing that we seen the day before, we're seeing again. Right? We're getting very nice retest off open print. I'm not going to allow this loss to affect the way I feel about getting in when I see my strategy, okay? It doesn't matter. It's like, I always use this with all my clients. I go, if you were playing poker and you got a king or blackjack, right? You got 2 kings. You're going to bet on it, right? That's a good hand. Now, if that king, and say you have a king and the house has blackjack and you lose the hand, are you going to not play a king king ever again? No, because you know king king is a good approach.